Don't be surprised if at some point this week Elon Musk pulls a rabbit out the hat. Keep in mind the delay of the Robotaxi event is not official, and it wouldn't surprise me if it's just not true to begin with. Or at least partially not true. Perhaps Elon is trying to figure out a way to make this event actually happen still on August 8th. Personally, just knowing of Elon for many years now, I think the biggest thing Elon would love at this point is to prove everyone wrong and still hold the event on August 8th and screw the shorts, by the way, in the meantime. But we'll talk about that a little bit later on throughout this video, towards the end of this video. And we're also going to have a pretty crazy week as well with economic data and earnings. I will also share that with you. And overall, my expectations for Tesla stock this week. We did have a pretty wicked end of the day sell-off on Friday. There's a lot of Wall Street folks talking over on X, and I want to give you a scoop of exactly what they're saying. So first and foremost, I think it's worth mentioning there was a pretty horrific event that happened over this weekend. I'm going to assume you're pretty familiar with this. Trump was shot in the ear, and there is some political, I guess, implications of this. The last time something like this happened was with Ronald Reagan, and it was a landslide victory for Reagan in 1984. And the markets might start to price this in a little bit more. You're actually seeing the odds of a Trump presidency rising, and that will be good for Tesla. That will be good for markets. That does mean more rate cuts, lower odds of a recession, and you can make an argument that fiscal responsibility with the government could be coming, aka less money spending, less debt that would need to be raised. That would for sure be good for 10-year treasury yields. But then again, markets do love when the government spends money, so that could be a bit of a trade-off. I would still say net positive for markets, and if you look at the combination of all these factors, that would be very positive. Now, do we get a knee-jerk sell-off based on this event over the weekend? I don't know. It could mean greater odds that Biden steps down and someone else steps up, and that would create a lot more uncertainty. So we just don't know yet exactly what the near-term implications could be, like coming tomorrow morning for stocks or this week for stocks. It's a bit of a toss-up on that front. But I do think over the next coming days and weeks, markets will start to price in a greater chance of a Trump presidency actually in the markets. That could mean lower bond yields and overall a better risk on nature towards small caps, mid caps, and interest rate sensitive companies like Tesla. You can see the Bloomberg odds of a Trump presidency are now hitting 67%, rising from about 50% before the debate, up 17 points from then. So yeah, you're definitely starting to see the markets coming around to this a little bit more. Now, I think it's also worth saying at the beginning of this video, the first 2 weeks in July are seasonally the best 2-week period for the markets throughout any year. So the first 2 weeks in July are better than the Santa Claus rally. They're better than the start of a year. They're better than that November rally we tend to get. And they're just a really bullish period in time for markets. But in fact, the second half of July, which we're heading into coming on Monday, is one of the worst periods for markets throughout any time of the year. So this is worse than, that September period that you usually see a lot of volatility, that first quarter period of volatility you normally get. It's overall a pretty historically bad period for markets. That does head into an August, which is also one of the worst months for equities. Now, perhaps you could say maybe some election volatility could get priced in to markets in the second half of July, or even in August. Normally you get that election correction around September, October, but as we're already expecting that in September, October, perhaps it could get priced in ahead of time, and then maybe September, October might not be as bad. Think about it like this. The outcome that everyone thinks is going to happen typically does not happen. So if we're all expecting September, October is going to be rough, maybe it's second half of July, or August could be rough instead. These are things to consider and be on the lookout for if they start to materialize. Definitely not a foregone conclusion, but perhaps a possibility. Now, again, judging off of this end of the day sell-off we've seen for equities, perhaps that's kind of a heads up of what we can expect in this upcoming week, that maybe we're going to get a lot more up and down volatility. You can see in some of these 1 minute candles, we have not seen 1 minute candles to the downside like this in a long time. I mean, this candle alone was 0.16%, a downside candle. I mean, you haven't seen that kind of volatility in a long time. For a while now, we've had green days of 0.16%. Days where markets have done absolutely nothing, like on June 27th, you were up 0.16%. We did that in 1 minute towards the end of the day on Friday. It appears like, from that standpoint, volatility could be coming back into markets. Now, Piper Sandler just said this over the weekend. They say, quote, there are rising concerns of a market correction in the coming months, warning that now is a time when, quote, fools rush into the markets. Despite Thursday's rotation into interest rate sensitive sectors such as regional banks, home builders, and solar stocks, the firm says there is not yet enough technical evidence to indicate that the broader market participation can be sustained. They say the melt up in the SPX and NASDAQ was undermined by a significant deterioration in breadth, leading us to believe that the SPX, the S&P 500, is overdue for a 10% correction towards its 200-day moving average and long-term uptrend off the 2022 lows. It is too early to, quote, rush into thinking that a sustainable rotation can be maintained, as the technical evidence is not there yet, Craig Johnson wrote in a Friday note. Johnson has a year-end target for the S&P 500 at 5,050, suggesting a correction of around 10% from the index's current levels. I continue to believe that earnings are the next big catalyst for markets that likely do give us that correction. Even consider for a moment, back in April, after Q1 earnings came out, I mean, stocks had rallied into that, of course, but you did get a 6% drawdown in the S&P. From that 6% drawdown lows, specifically on April 19th, you are up about 14% just from that level. You were up about 14.5% at the highest point on Friday. So you're up a lot in just the last quarter. And could history repeat itself? Could we get a correction based on earnings? Probably. Now, I mentioned the whole Trump stuff and the effect on the markets in the beginning of this video for a very specific reason. Because if we do start to go into a correction, I don't think it's going to be a broad-based panic kind of fear moment. I actually think you could see sectors and areas of our markets do okay. I think Tesla could do okay, especially if people start to price in a greater chance of a Trump presidency. Investors are going to say, well, Tesla's going to benefit from that. We're going to have lower rates. So perhaps Tesla, financials, maybe some small caps that are profitable, quality names could actually do well. Maybe not advance or rip to the moon, but you could see them hold up their values. Tesla may drop $10, $20, but I don't think it has to see a vicious sell-off of 20% if the market's correct 10%. That's not what I would expect. Now, Apollo just said as well on Friday, quote, the current AI bubble is bigger than the 1990s tech bubble. And if you look at the top 10 stocks, the 12-month forward PEs, you're higher than where you were in 2020, just barely. And you're way higher than where you were in 2000. If you look at the rest of the markets, excluding the top 10 stocks, you're higher than 2000, lower than 2020. And if you look at the S&P 500 itself, you're higher than 2000, but lower than 2020. And they're basically saying the AI's the reason why these top 10 stocks have been outperforming so much. And I mean, that's true. We all know that's true. And that is why this upcoming week's earnings, specifically regarding AI, will be so important. Now, we really don't have too many, market moving earnings this week. You have a lot of banks Monday and Tuesday. You have a lot of banks on Wednesday. You have Johnson & Johnson. You have Discover, which can be important for the state of the consumer. You do have United that reports Wednesday and after hours, but you have ASML which is one of the stocks that has done very well in this whole AI revolution that is highly connected to your GPU providers, right? So if ASML has bad earnings or just not fantastic earnings Wednesday pre-market, you could see a reset in a lot of your other AI stocks because markets try to extrapolate what, for an example, ASML earnings could look like for NVIDIA. If ASML disappoints, markets will say, maybe NVIDIA disappoints. And that's where you get a broader kind of sell down in not just your GPU providers, but also a lot of the Mag 7 stocks or Super 6 stocks. Let's exclude Tesla in this. They don't have any AI hype embedded in them, not nearly to the same degree as your Super 6. But markets will extrapolate that and say, maybe that means bad news for the other biggest stocks in our markets. Now, you also have TSMC Thursday pre-market. They will be more important, but along the same lines as ASML. You know, good earnings for these guys is going to mean good earnings for, you know, at least the GPU providers like NVIDIA, you know, server rack providers like SMCI, Dell, even maybe Intel could be extrapolated as, you know, they could have good or bad earnings. Now, I think Mag 6, they're gonna, that's a high bar to beat. They are priced for perfection. I don't necessarily think if TSMC or ASML have great earnings, that means markets are gonna love Apple earnings after Apple's up like 20% in the last quarter, right? So keep that in mind, but I think bad earnings will be seen as bad for all of them. But good, not necessarily seen as good for all of them, because markets are going to start to want to see some return on investment from these, you know, multi-billion-dollar a quarter investments into GPUs, and we're not going to see that. We're not going to see any return on investment from these GPU purchases that these companies, these Mag 6 companies have been making, and markets may start to look down on that a bit. And don't shoot the messenger. That's just what Wall Street has been saying. Now, Thursday, you will have Netflix that historically has a very large correlation to Apple, Microsoft, Google, Facebook, you know, Amazon, all of those companies. But again, if Netflix does good or bad, I don't necessarily think that is a sign of those other companies, you know, doing good or bad, right? Netflix will cause them to move, but it's not a sure thing that, you know, you're going to see disappointments at Apple or Google or Amazon, or good things at Google, Amazon, or Microsoft, or the rest of the gang. So I think earnings this week will be very, very, very important. And the earnings we've seen so far have not been great. The banks have not been great. Pepsi has not been great. The other companies you've seen just really haven't been great. So I do think Friday was a bit of that front running into what may be a disappointment for this earnings season. Now, good news is if you're a Tesla stock investor, we're going to have really good things for Tesla earnings. Tesla earnings are going to come in fantastic. Question is margins. How is buying down that interest rate affecting margins? I think it's probably better for margins to buy down the interest rate than to cut prices to the same degree that they were. So I would imagine margins actually beat to the upside. But then the only thing that really matters on Tesla earnings, I mean, margins will be important, that will matter, but it really comes down to, do we get the next gen models that are actually displayed to us? Do we get more information on that? That's what will drive Tesla stock higher after Tesla earnings, regardless of everything else. And if we don't get any new information on new models, well, yeah, Tesla's not going to have a great post-earnings reaction. I think the good news is this is the quarter we're probably going to get those new models that are actually showed to us. Now, the other big story of this week will be Fed Jerome Powell. Now, there's a lot of people arguing the Fed should be thinking about cutting rates in July. They haven't publicly signaled that. So if they do, that could definitely for markets. And if they want to signal that, they're really going to need Jerome Powell on Monday, tomorrow, well, afternoon, around 12:30, to come out and strongly signal that they may cut in July, or just outright say they plan to cut in July. Now, markets have only a 6.2% chance of this, but you know, I wouldn't be surprised if the Fed comes out and raises the odds of a cut in July, especially if Powell knows, let's say the retail sales are going to come in bad on Tuesday. That's going to be your next big catalyst. And Powell, odds are, coming tomorrow morning, he's going to know, like, hey, those retail sales numbers could be really bad. We may want to foreshadow a cut July 31st. Now, does it really matter? I don't know. I don't think so. Markets are pricing in 3 cuts by December 18th. If you look at investing.com, the Fed rate monitor tool, that's what I'm looking at here. Markets are pricing in 50.6% odds of 3 cuts by December 18th. So markets are pricing in a cut September, November, and December. Perhaps could we get one in July, maybe one in September, skip the election, election cut around November 7th and go to December instead? That's a possibility. I could see that as something that could be possible, and that could, sway markets coming tomorrow morning, depending on what Powell says. But either way, markets are still pricing in 3 cuts by December 18th. There is 40.5% odds of only 2 cuts. So pretty firmly pricing in here 3 cuts by December 18th. Now, like I said, on Tuesday, you're going to get retail sales month over month. We're expecting 0%. A lot of firms on Wall Street are actually expecting a pretty negative number there. So if we do get a surprise negative number, that directly affects your GDP estimates, because 2/3 of the economy is, people spending money. About 72% is people going out and spending money. So if retail sales come in bad, your GDP estimates are going to plummet, and that really opens up the door, for the Fed to think about cutting rates as soon as possible. There's still like 2 months before September, that September Fed meeting. Maybe the Fed would want to cut before, I'm going back and forth with this. We'll know more tomorrow, but it is possible we could get a strong signal of a July cut. Again, especially if those retail sales numbers are going to come in bad and GDP estimates are going to plummet. Right now, the forecast is 2% from the Atlanta Fed GDP Now tracker, but that could fall under 1% based on the retail sales number coming out tomorrow. Coming out on Tuesday. Now, on Wednesday, you will get building permits. The more building permits, the better. That likely means, from the market's perspective, less housing inflation. We did see housing inflation crack in the CPI report we got. Especially your core CPI report. You were expecting 0.4% month over month. It came in at 0.2%. When that momentum starts, it tends to continue to last. So odds are we're going to get a string of really low CPI reports, and perhaps that could sway the Fed's decision a bit as well. Now, on Thursday, you will get the deposit facility rate, the ECB interest rate decision. You're not expecting the ECB will do anything here, so any kind of surprise rate cut or something along those lines could definitely be impactful to markets. You will get initial jobless claims, Philadelphia Fed Manufacturing Index, continuing jobless claims, Philly Fed business conditions, CapEx index, employment, new orders, and prices paid, all coming out at about 8:30 in the morning on Thursday. And then on Friday, you're not going to get much of anything, but I will say, spread throughout this week, you'll get a lot of Fed speakers. So it's not just Jerome Powell coming tomorrow morning. It's like all of the Fed that will be speaking throughout this week. So if Powell sends you that strong signal for July, the rest of the Fed members could follow suit on that if perhaps they wanted to. But odds are they'll probably continue to signal for September. So nonetheless, whichever way this week turns out for markets, I think it's going to be incredibly volatile. And I think Tesla is no exception to that. Again, there are positive forces at play with Tesla. There's underinvesting that happened for a long time with big money. Now I think big money is getting on the right side of things. They're allocating to Tesla again. They're starting to look forward and to look ahead. A lot of this reallocation, I believe, is retail actually, getting back into Tesla, because a lot of retail sold out of Tesla at some of the worst times. You can see that over on StockTwits. I share that data each and every single day. If you look at the sentiment gauge, most days you're in extreme bearish territory, even as Tesla stock is ripping higher. And that just says to me, a lot of people, retail, underinvested in Tesla now. That was not the case anytime Tesla was in the 150s, 160s, or even hitting the lows in the 140s. You were pretty consistently bullish over on stock twits, or extremely bullish when we would get those good days. But now we're getting most good days after good days after good days, and it's just bears, right? So I think retail investors getting reallocated to Tesla will continue to be a positive. There's a massive short position on Tesla, and every day we continue higher just crushes that short thesis even more. Now, I don't think shorts actually are pushed to cover on short positions until Tesla stock is $300, $320 per share. I think that's when you see more of a, push to cover on those short positions. But still, you will incrementally start to get more shorts covering when you're, in the 250s, 260s, 270s. Now let's take a look at the bubble chart for Tesla stock expiring by this Friday. We did see a lot of activity around that 250 call towards the last couple of minutes of trading on Friday. You had volume of 81,000 contracts that traded hands there. It does suggest to me hedge funds, institutions, big money is positioning for a rally into the 260s, 270s, because if you're buying those contracts, your break evens are, north of 250. They're likely around the high 250s, 260s or so. So the break evens on that would imply at least around 260. And then on top of that, if you're buying those options, you want to do more than break even, right? You want to make some profits, which would suggest Tesla potentially entering into the 260s this week. Now, if you take a look at the other most active strikes for Tesla, the second most active strike is the 275 call, with open interest of about 41,000 and volume of about 22,000 on Friday. And then the most active strike of all is the $300 call with open interest of 46,000 and volume of 38,000. Which, just imagine this for an example. We still don't have Tesla or Elon confirming whether or not the robotaxi event is actually delayed until August 8th. What if this week Tesla or Elon says specifically, the robotaxi event is not canceled? Maybe their software engineers, maybe their engineers in general, have changed some of the structural components of what the robotaxi is going to look like, and they will actually be ready by August 8th. I think, just being I wouldn't say knowing Elon on a personal level for long enough, but kind of knowing how Elon is, it would not surprise me if Elon wants, more than anything right now, to be able to come out and say, no, we're still doing the robotaxi event on August 8th. I think Elon would love to squeeze the shorts in that kind of fashion. Hey, bet against me, bet against Tesla, destroy Tesla stock on Thursday for no reason. I personally think Elon would love to be able to announce the robotaxi event is not delayed. And there's been so much importance put on August 8th with, the Chinese, right? August 8th, 8/8 is a very important date over there. It wouldn't surprise me. I'm not going to say it's a base case assumption at this point. I'm not going to say it's something I'm, going all in on. But mark my words, it would not surprise me if this week Elon says, we're still doing the event on August 8th. Wouldn't surprise me. Now, I would imagine Tesla stock would rally big time off of that. And especially if it was only because of some of the, changes they wanted to make with the actual vehicle, not the hardware, not related to FSD itself, I would imagine that would be taken very favorably for Tesla stock. Now, in that kind of scenario, if that were to happen, it would not surprise me if Tesla's a $290, $300 stock by the end of this week. If that happens. Now, that's not a base case assumption for this week. So I would say a more base case assumption is in between 255 and 260. That's kind of what I would expect, because I think there's going to be up and down volatility. I don't think it's going to be a straight line up this week. I don't think it's going to be a straight line down this week. In a more worst case scenario, if the markets fall out of bed, AI earnings are bad, and economic data is bad, the Fed does not signal they're going to cut in July, then I think on a more worst case scenario, you're looking at Tesla around 230. That would be where roughly this trend line is. It's more around 227, but I think you'll find a lot of support around 230. You found a lot of support around 235, so maybe that's ultimately, the more worst case scenario for this week. But I don't see us falling under this, multi-year trend line that we just easily broke here recently. I think you're going to stay above that level. Now, could be wrong. Obviously, this is not financial advice. I'm not a financial planner. I'm not a fortune teller. But this is from my perspective, being someone that is majorly in Tesla, that has been relatively correct. I've been correct on this rally. I don't want to, pat myself on the back too much, but I've been correct on this rally. And these are kind of the ranges I foresee for this week. Best case scenario, around $300 per share. That's if Elon says the whole Doomberg, delaying of the robotaxi event was false to begin with. We haven't heard anything yet. It could be. I mean, if Elon was really going to delay this event, I think he would have said that. Now, I think Elon right now is trying to figure out how they can fix whatever software structural, changes they want to make with the robotaxi and still do the event by August 8th. I think that's why Tesla has not officially confirmed it. So we'll see if they can do that. If that happens this week and it's announced that it's still going to happen on August 8th, $300 per share looks pretty dang likely in my personal opinion. Now, if that does not happen, we get up and down volatility as more of a base case, as per I'm expecting. Anywhere from 255 to 260, marginal upside this week would be expected. And I just think that's because we need to consolidate after this large run. A rally to 255 would put Tesla stock up about 3% for this week. 260 would put Tesla stock up about 5% for this week. That's not a measly return for a week, right? That's still a pretty good return for a week, but that would be just my expectation. In a more worst case scenario, down to 230, that would put Tesla stock falling about 7% this week, which I find pretty appropriate. Now, to get to this trend line, you would have to see a fall of about 8.5%, which I think you'd find a lot of support coming through in this area. So these are my expectations for this upcoming week. Let me know what you think about this down below in the comments section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.